Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now let's look at the buy and hold strategy. So, what is the buy and hold strategy? This is a passive investment strategy in which an investor buys stocks or other types of securities such as exchange traded funds, also known as ETFs, and holds them for a long period regardless of fluctuations in the market. An investor who uses a buy and hold strategy actively selects investments but has no concern for short term price movements and technical indicators. Many legendary investors praise the buy and hold approach as ideal for individuals seeking healthy long term returns. Recognizing that change takes time, committed shareholders adopt buy and hold strategies. Rather than treating ownership as a short term vehicle for profit in the mode of a day trader, buy and hold investors keep shares through bull and bear markets. Equity owners thus bear the ultimate risk of failure or supreme reward of substantial appreciation. Now let's look at some of the benefits of buy and hold investing. Conventional investing wisdom shows that with a long time horizon, equities render a higher return than other asset classes such as bonds. There is, however, some debate over whether a buy and hold strategy is superior to an active investing strategy. Both sides have valid arguments, but a buy and hold strategy has tax benefits because the investor can defer capital gains taxes on long term investments. 2. Purchase shares of common stock is to take ownership of a company. Now, ownership has its privileges, which include voting rights and a stake in the corporate profits as the company grows. Shareholders function as direct decision makers with their number of votes being equal to the number of shares they hold. Shareholders vote on critical issues such as mergers and acquisitions and elect board directors to the board. Activist investors with Active investors with substantial holdings wield considerable influence over management, often seeking to gain representation on the board of directors. So the debate over passive versus active management style persists, and a buy and hold investor reflects a passive management style. So in the case of a mutual fund or exchange traded fund, index portfolios mirror that of a common benchmark. As indices rebalance and weightings increase relative to market capitalization, turnover rates, which are often 5% among passive funds, these remain ultra low as managers focus on issues across the broad market. Stocks are held for as long as they remain components of the indices. So, a buy and hold is a passive investment strategy wherein an investor buys and holds a security for a long period regardless of short term fluctuations in the market. Another key point is that there are valuable tax benefits available in buy and hold as the investor can defer capital gain taxes on long term investments by holding rather than selling. Critics claim that this strategy is good for investors, but it forsakes gains by riding out the volatility rather than locking in the gains. Those arguing against the long term strategy claim that investors forsake gains by riding out volatility than locking out on gains. There are some professionals who regularly succeed with the short term trading strategies, but the risks can be higher. Investment success is also realized by loyalty, commitment to ownership, and the simple pursuit of standing or not moving from a chosen position. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel.